And thank you for having me. I think last year at this time, rates for VLGCs were at near the $100,000 a day mark. This year, rates are a bit lower at around $50,000 a day. This is still substantially above cash break-even levels, and with low deliveries the next couple of quarters and supportive east-west arbitrage, I think there is still reasons to be optimistic. But interestingly though, despite coming down from the high levels at the end of last year, the mid-size and handy-size vessels are now quoted above the levels that we saw at this time last year. And adding to this, we have a low order book, at least for some sizes within that segment. So with that, Mats, I think we can kick things off with you. What has happened in the handy segment so far this year, and why do you think rates in your segment continue to trickle steadily upwards?
Yeah, it's true. It's been a good year. Last year was our record result EBITDA-wise, and Q1 we also delivered the highest EBITDA in the history of Navigator Gas. So that's been a good start to the year, and we still see very robust markets, and we are quite confident about the outlook. Part of the explanation is that the order book is very small in the small gas tanker segment, in the handy-size segment as well, and that of course supports and gives visibility for the next 3 years that the capacity, the supply is going to be kept in check. And at the same time, we're seeing that natural gas liquids production in the US has been growing very nicely, and we see that the investments into the midstream, into the infrastructure to make sure that the products, the gas, can be exported and get onto our ships, it's been continuing. So that means that demand for our shipping services have grown steadily and supply is not changing. So that of course feeds into rates that have been strong across the board in the handy-size segment.
Thank you for that. And touching upon the production figures, and as most of you guys are aware, the east-west arbitrage is an important factor for at least the VLGC segment. US production and exports have continued to be strong this year, with imports coming from ton-mile heavy ports such as in the Far East. And inventories in the US has also come up following the cold snap at the beginning of this year, and hence freight rates also rebounded quickly off of that. And Randi, going to you, what is your view on the production figures going forward from the US, and is the expectation that it will continue rising in the years to come?
Yeah, if you look at the US production the past 10 years, it's been fantastic. Yeah. Last year we saw a US production growth of 10%. It's not too bad this year either, 6% year on year. And into the remainder of the year is probably going to flattening out, ending up with 3-4% growth for 24. If you look at the EIA numbers or forecasts, but they tend to be under forecasts. Into 25, we see terminal expansions in Targa, Enterprise, Netherlands, adding more volume. So we think that the US exports will be, backed by the US production and also more capacity on the terminal side.
Yeah. Yeah. Thank you for that. And going over to ammonia, which is a segment that is high expectations and high anticipations for future trade and future growth. And I think currently the most of the seaborne transportation of ammonia goes in the mid-size and handy-size segments. And Mats, the share of ammonia that you are trading has been increasing for the past couple of quarters. Could you shed some light on the main drivers behind what has happened?
Yeah, thanks. A lot of the disruption was caused by the war in Ukraine, where the flows of ammonia from Russia and Ukraine into Europe stopped. And that meant that the ammonia had to be sourced from elsewhere, from faraway places, and a lot of that happened on handy-sized ships like ours. So we used to maybe have 2 or 3 ships trading ammonia. Today we'll have 9 or 10. So we have a relatively large proportion of our fleet and of the global ammonia transportation done on our ships. So that's exciting. But I think much more interesting is the midterm, the long-term outlook for ammonia. Once it's not only for fertilizer, but also for energy, for fuel for marine vessels, for power plants. And here we'll of course see a multiple expansion of demand for ammonia. And that means that there are a lot of production projects that have initiated, and we are ourselves involved both the upstream, where we are looking to replicate our Morgan's Point terminal within ammonia, so that we can help transport it, the marine logistics, and handled by us. We're also investing down in the infrastructure part that has to do with the marine fuel, so that we've invested into Asane Fuel Solutions, where we'll be providing ammonia bunkering stations over time. So once getting this infrastructure in place, we think that the future for ammonia is super, super exciting.
Yeah, thank you. And speaking of growth in the ammonia space, accounting for current and project with FID, you have around 7.6 MTPA of ammonia, new blue and green ammonia coming online until 2028. And most of this, though, will be transported likely by the mid-size segments still. But I'm curious, Kristian, on your views on this market, and if you can perhaps also share some comments on the VLAC and the future production growth and trade for those types of vessels, this and the other side of this decade.
Yeah, sure. I mean, like Matt says, ammonia has been shipped on LPG vessels for decades, so this is not a new market for us. And also for BW LPG, you know, we were involved in that trade on the LGCs, which we sold a few years ago, though. So we're quite familiar with ammonia trade in general. I think right now there are lots of talks and good prospects about the future of the ammonia trade. I think it's a game more for the 2030s. There is still a need to build out the infrastructure onshore so you can fit the vessel size with the onshore infrastructure, because right now it's, like Matt says, you know, the smaller, mid-size, handy-size vessels, which are the workhorses for this segment. In the future, it could very well be that the VLGC, VLAC size vessels will serve this, especially on the longer haul. That makes sense. So I think that could very well be a market which develops, but I think it's more a game for the 2030s than the 2020s as it looks now.
Yeah, yeah. And you know, last year it was not a talk about the order book and how well the market would be able to absorb it. In retrospect, you can see that the market was pretty strong and absorbed the order book pretty well. And now you have this year a lower order book. You are now through a bit over half of the scheduled newbuilding deliveries for 2024. 25 will be a bit lower. And Kristian, so just continuing on this, how do you view the order book at the moment and the ability for the market to absorb it? And how are you still people looking at new buildings?
Yeah, well, we have a fairly good visibility on the market at the moment, because as we move into second half of this year, it's only 6 vessels to be delivered out of a fleet which is close to 400 vessels globally. So it's a very modest growth. Next year it's like 10, 11, 12, 13 ships scheduled for delivery. So there's definitely good visibility on the market the next 18 to 24 months. And if you combine that with the growth in exports, like Randi said, from the US, but also from the Middle East from next year onwards, you know, it's we think the market fundamentals looks they look very strong. Yeah. And then of course you have some more vessels being on order for delivery in 27, 28. But that's again very much also up, you know, built against the ammonia case, and there will be more LPG on the water as well for transportation.
Yeah. I could just add a few comments on that as well. 27 is obviously the next bottleneck in our market, potentially. But if you look at the age of the fleet, the VLGC fleet today, 34 vessels are older than 25 years. So in 27, these vessels will be more than 30 years. And the number of vessels being delivered in 2027, the next hurdle to pass, is almost the same number. Yeah. So these vessels will either go to scrapping, and it's been very few scrapping candidates within the VLGC segment. Ship owners tend to postpone the scrapping when the market is very, very good.
Yeah.
So we think that it's likely that the order book in 27 is going to be absorbed by older vessels.
Yeah.
So if they're not scrapped, they're likely going into captive trade.
Yeah. Are you looking at new buildings at the moment?
Sorry?
Are you looking at new buildings, investing in new buildings at the moment?
We're always looking at good business opportunities to invest, but to be honest, it's a bit too expensive.
Yeah, but I think if you look at the yard situation at the moment and the interest rate environment and all of those things, prices are unlikely to come significantly down in the interim. So with that backdrop, wouldn't it just make sense to order the vessel now? Because at least then you know what you're going to pay and when you are going to receive the vessel.
Well, if you were to order a VLGC full spec, ammonia fuel ready, ammonia as cargo, you're likely going to have to pay 125 million with the delivery in 28. And to calculate, that it's very difficult to calculate a good return on equity over time, and the payback time is not very attractive either. So if we were to invest in your tonnage, I think it makes more sense to wait a few years and pick them up at that stage.
Yeah.
And I think, as a comment to that, I think we're also at the point in a cycle where most of us prefer to and focus on paying out dividends to our shareholders instead of plowing more money into record high priced assets at this point in the cycle.
Yeah, and it makes sense, but this also has another interesting discussion where, given the grades where rates are now, you have the second-hand versus new building discussion, and also especially for you, Randi at Avance and Kristian at BW, you are trading to a premium at NAV, so your share is a great currency. If there are opportunities on the private fleet side, are there any private fleets out there that looks interesting and where the sellers are willing? Kristian?
Well, we're always looking at opportunities, and we are definitely turning every rock and stone out there. And like you say, now the share price is a currency that can be used. So, of course, we're looking at opportunities every day, but I can't share all of them here and now, unfortunately.
Yeah, and speaking of expanding the fleet, I think I believe this is a topic that a lot of people have been thinking about, at least the past couple of years. And I think, Kristian and Randi, when are you two going to join forces and create the largest VLGC owner out there?
Maybe we should do it on stage now.
Exactly. That's...
Maybe some bankers in the room can help you.
And speaking of... Yeah.
Seats here, so...
Yeah, and speaking of this Mats, do you consider it to be appropriate or an attractive alternative to be a part and merge with an owner of VLGCs and be a fully integrated owner in terms of vessel sizes and trades?
I don't think there'll be significant synergies between the VLGC world and the fleet that we operate in, because we do ethylene, we do ammonia, we do some LPG, but it's increasing, or it's a declining part of our total portfolio. So I would probably struggle to see the synergies here. We have a number of very, very exciting opportunities for growing the business in our existing segment, and also in the infrastructure investments that we are doing right now and that we are planning for. So I don't think integration with VLGCs is in the cards for now.
And I think, Fredrik, that model has been tested before in our segment. If you go 10, 12, 15 years back, BW, as one example, we had vessels from VLGCs all the way down to mid-size, and even handies, even before then. But I think the capital market, they have a preference for pure play shipping companies, and they have proven to be more successful and better valued than when you mix up several shipping segments in one stock-listed company.
Yeah, and speaking of pure plays and investing, Mats, you are now in the last phases of expanding your ethylene export terminal at Morgan's Point. Could you shed some light on this, and is the terminal investment affecting your ability and capacity to invest in other areas of your business?
Yeah, no, it's very exciting because the expansion that we are doing right now, it's going to be finalized in December, and that means from 1st of January, we'll be able to increase the export volume by at least 55% compared to the 1 million tons that we are exporting per annum right now. And it has some flex upside, so it could even end up being significantly more than that. So that's going to add a lot of demand for transportation on ethylene carriers in the years to come. So that's in itself very exciting. It doesn't impact our ability to do other things. We have been paying down debt quite significantly over the last couple of years. We have a net debt to EBITDA of 2.4 times now, which is low. So I think if we were to do more investments now, it could be financed from debt. And we see both when it comes to consolidation. We are looking for opportunities in our existing segments. And I think also to ensure that there's shipping capacity for the expansion of our terminal, that at some point in time, at the right time, there could be new buildings also coming.
Yeah, and Kristian, you're at BW, you're also investing in terminals in India, and simultaneously you have the product services arm, which has performed extremely well for the past couple of quarters. So is it fair to say that, given the backdrop and comments on the new buildings and second-hand values today, is it fair to say that you believe that it's more attractive to invest in other areas than traditional shipping? And how is it affecting your shipping fleet that your investments are being skewed towards more trading and terminal business?
We're first and foremost a shipping company. So if you look at our balance, 90-95% of our assets are ships. So these are small investments compared to the value of our balance sheet. But we have made these investments because we believe it creates a more robust and resilient business model which can withstand the volatility through the cycles in a better way than if you're just a shipping company floating with the tide, so to say, through a very volatile market, which the VLGC market is. So we're doing this to also bring more optionality and flexibility into our system, both in terms of how we can invest, but also how we can employ our ships and participate in value creation and throughout the LPG value chain. So we see this as an addition to and support to our core business, which is shipping and will be so in the future.
Yeah, and circling back to that discussion again, Randi, where will we see Avance grow going forward?
Well, if you look what we've done the past 3 years, we've been selling off 7 vessels, 5 of them older tonnage, 15-year-old. We sold them at the 2 last ones we sold at 66 and 60. We acquired them at 70 14 years ago. They made their fair share to the net profits over the year. And then we sold off 2 new builds, acquired at 78, sold at 120 this year, only 3 years later. So in total, we have been selling off vessels, we've been buying vessels, we've been buying in total 10 dual fuel vessels the past 3 to 4 years. 6 of them VLGCs, 4 of them MGCs. So of course, we're always looking for opportunities, but it's very crucial for us. It's in our DNA that we should invest and divest in the right time in the cycle. So it's more about that and returning the best value we can back to our shareholders.
Yeah, thank you for that. And following several years now with strong earnings, debt levels have come down, but you have also been paying out a lot of dividends. You, Kristian, at BW paid $1 a share dividend in 1Q. You at Avance, Randi, you have been paying out the proceeds or part of the proceeds from the vessel sales that you just mentioned. But you at Navigator, Mats, you have had a bit different approach. You have been opting for buybacks instead. And you have your capital return policy on top of this, which also favors buybacks over the fixed dividend part. And you now, a couple of weeks back, did a 3.5 million share repurchase, taking the shares from a larger shareholder. And I think, what considerations are you doing when you are thinking about shareholder returns and how it affects also liquidity of the stock, but also pricing?
Yeah. Just to be clear, we do pay dividends. We implemented a capital return policy last year, and since then we've been paying quarterly dividends, 5 cents per share every quarter. So dividends is important, and we are very committed to paying dividends. We think that our share price is such that it makes more sense. It's better for our shareholders if we direct excess proceeds into share buybacks. So we've done that totally over the past year and a half. We've paid $120 million to share buybacks and dividends, so quite a significant return here. We think that share buybacks are attractive now, and we thought that the transaction we did 2 weeks ago showed that we could increase at the same time free float by having BW sell down 5% to the market, and then we took the other 5% at what we think is, in hindsight, a very attractive price. So we're very committed to paying that, and we'll continue to opportunistically, you could say, pay both dividends and do share buybacks, but maybe you could say tweak the relative proportion from time to time.
Yeah, but flipping the coin a bit on that, take the discussion a bit further, but because the rationale behind buybacks is, they want to get the gap to NAV into close, but wouldn't you also guess that if you did a large cash dividend, it will also bring pricing a bit up?
Yeah, it's the good old discussion about share buybacks or dividends, and I think doing both is the best of both worlds here. I think our dividend is a good place right now, and I think the share buybacks have been significantly $50 million discretionary last year, $50 million just 2 weeks ago, on top of the quarterly repayment. So I think it's a good balance we've struck.
Yeah, and Kristian, you guys have paid down almost all of your debt. I think, do you so leverage-wise, do you have a target debt level that you seek to achieve, or is it more of a floating consideration that you are doing?
I mean, yes, our debt level is on the lower side for sure, but the reason for that is simply that we've struggled to identify profitable investments. So it's not an aim in itself to have a very low debt level like we have now, but we rather identify, good investments and projects before we start investing again, and then of course the debt level will increase on the back of that. So it's definitely not an aim for us to have a very low debt level like we have today over time.
Yeah. And speaking of debt, and Navigator, they have a bond outstanding. You guys do not, and I think quality shipping bonds are of high demand currently. And I think this goes for both you, Randi, and you, Kristian. But would it be something that you would consider taking and issuing a bond? I know spreads have come down. You don't need the money immediately, but I think in shipping, it's always prudent to collect the money when it's available, and because when you need the money, usually it's a bit more expensive.
Bring us the deals, we'll do it.
Yeah, that's good. And speaking of US dual listings, Kristian and the VW did a US listing some while back, did a pretty good effect on pricing, I would say. And you, Randi, at Avance, is this something that you would consider, or are you happy at the Oslo Stock Exchange?
Well, we acknowledge that you are broadening your investor base when you're based in the US, and we got a lot of traction since the market has been very strong the past year, and we've been ramping up dividend. Every shareholder all over globally loves dividend, but I think the US investors love it even more. So yeah, it would make sense, but on the other hand, you should have a market cap, a sizable market cap over time, at least half a billion. And just a few years back, we were below that. A year ago, we were $650 million in market cap. Today, we are 1.2. So for sure, we're always looking at good opportunities to increase the share price and the value of the company. But as of now, we're actually trading quite good on the Oslo Stock Exchange. And I think it would make sense if we were to do a US listing to combine it with some issuance.
Yeah. Yeah, thank you. And just to run things also on a call it fleet TC versus spot. I know Navigator, you are operating in a more TC focused oriented environment, and I think wouldn't it be prudent also? I know you have a few TCs, but would you consider increasing the TC coverage at current rates, which is pretty favorable compared to cash break-even levels, Kristian?
You know, we are quite open about our the way we take coverage in our fleet and protect the downside, which is needed because it's a very volatile freight market that we operate in. So we have between 35 to 40% of our fleet capacity covered on time charters and through FFAs. And we're very confident with that ratio for time being. And I think you can argue that you can go even lower maybe, because if you believe in the market, you can increase your spot exposure. But I think for us, it makes sense to have to wear some armor when you walk into the lines then, and you know this market can be quite brutal in the when the downturn comes, which it does from time to time.
Yeah, and with that, I see the clock is at 0. So I thank you all for your attention, and thank you all for the panelists, Kristian, Mats, and Randi for attending.
Thank you.